Hey everyone, welcome back to Corporate Decoder, where we try to uncover the hidden stories in company filings. Today we're diving into Knightscope's latest report, and let's just say the future of security robots might be getting a little more interesting, or maybe just more funded. Alright, so what Knightscope, which makes those autonomous security robots you might have seen patrolling around, has done is basically file an update about a big financial move they're making. They've officially filed a prospectus supplement. What does that mean in plain English? Well, it means they're getting ready to sell up to $50 million worth of their stock. Think of it like this: they're opening the door to sell more of their company's ownership bits to investors. This particular filing is about their common stock, which is basically like the regular shares that most people buy and sell. They're authorized to sell up to $50 million of these shares from time to time, meaning they can do it over a period, not all at once. This is being done under an agreement they already have in place. It's like a pre-approved plan to sell shares whenever they see an opportunity, usually when the stock price is good. This agreement was made back in early 2023 with a company called H.C. Wainwright & Co. LLC, who are acting as their sales agent. Now, Knightscope itself is trying to make a name for itself in the security industry with its robots, offering things like physical security and data insights. They're aiming to replace or augment traditional security guard services with technology. The company's stock is traded on the Nasdaq Capital Market, which is generally a marketplace for smaller growing companies. It's also worth noting that Knightscope identifies as an emerging growth company. This means they get to follow some slightly less strict reporting rules to help them grow without being overly burdened by regulations. This filing is classified under other events. It's not a major financial report like a quarterly earnings, but it's an important announcement about their financing activities. The date here is July 18, 2025, and this filing is essentially confirming their intention to raise capital through selling stock under their existing registration. It's important to understand this report isn't a direct invitation to buy their stock. It's more of a public announcement that they can sell stock, and any actual sales will be handled through proper channels. They're making sure to cover their legal bases here. They also included a legal opinion with this filing, which basically says that the shares they're planning to sell are legally sound. This is standard practice to reassure investors that everything is above board. Now, looking at the bigger picture for Knightscope, they are essentially a company that is still in a growth phase, investing heavily in developing and deploying its robotic security solutions. Raising $50 million is a significant amount of capital for a company at this stage, suggesting they either need it for further research and development, expanding their sales and marketing efforts, or to cover operational costs as they scale up. What does this $50 million offering signal? Well, depending on how they use the money, it could be a positive sign that they're confident in their future growth prospects and need the funding to achieve ambitious goals. On the other hand, it can also mean they are burning through cash faster than they are generating revenue and need external capital to keep the lights on. For investors, understanding the company's cash burn rate and profitability is crucial when evaluating such an offering. The story here is about a company trying to fuel its growth through the public markets. Knightscope is in a competitive space with traditional security services and other emerging tech companies. Their ability to execute their business plan and gain market share will be key to determining if this capital raise leads to long-term success or simply extends their runway. As an emerging growth company, the market will be watching closely to see if they can translate this investment into tangible results and eventually profitability. Now, looking at these numbers more broadly, Knightscope's strategy seems to be focused on innovation and market penetration through technological advancement. Their ability to secure this kind of funding indicates a level of investor confidence in their vision. However, the real test will be their operational execution and their ability to convince clients to adopt their robot-based security solutions over more traditional methods. The $50 million infusion is a critical tool in that endeavor. In conclusion, Knightscope's filing signals a move to bolster its financial resources for future growth. As an emerging technology company, this funding is a vital step, but it's the strategic deployment of these funds and their ability to deliver on their promises that will ultimately determine their success in the market. We'll be keeping a close eye on their progress. Alright, that's our breakdown of Knightscope's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.